Hi, I'm Mike Capizzola from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at a business that makes the economy tick and helps to keep things moving. That business is Hyster-Yale Materials Handling, which trades under the ticker HY. The company makes and sells forklifts, attachments, and hydrogen power solutions across the globe through its 6 well-known brands. In 2019, the business generated revenues of $3.3 billion and operating profits of $53.9 million. The business can trace its roots back to 1840, when Linus Yale started a locksmithing business in Newport, New York. The company began to manufacture materials handling equipment in 1875. In its current guise, Hyster-Yale was spun out of the conglomerate NACCO Industries back in 2012, and the shares have appreciated by some 126% since then. The business employs 6,100 people and generates 67% of its sales in the Americas, with a further 20.9% of revenues coming from Europe, the Middle East, and Africa, or EMEA as it's known. The company manufactures more than 400 different forklifts with a variety of propulsion systems, including lithium-ion batteries, LPG, diesel, electric, and hydrogen fuel cells. In the period between 2004 and 2019, the global forklift market grew 5.4% per annum. Today, the global market for forklifts generates demand for approximately 400,000 units per year, with the biggest demand coming from Asia and EMEA. COVID-19 and the economic lockdown that it brought about directly affected Hyster-Yale's business and that of its customers, who are primarily in industries that are related to trade, transport, and logistics. To help offset the downturn, the company is looking to cut costs and make the best and most efficient use of its cash flow, which includes investment into its attachments business and its hydrogen fuel cell business that offers an ecologically friendly, low-carbon power source. Hyster-Yale will update investors with its Q4 2020 earnings after the close on February 24th and will host a conference call on the following day. Ahead of those results, there has been plenty of insider buying of Hyster-Yale stock by a group of investors, among whom is David Williams, who sits on both the company's board of directors and its finance committee. Mr. Williams and his associates were able to buy just under 105,000 shares of Hyster-Yale for $59.04 a share, representing an investment of some $6.17 million. So, just how did Mr. Williams and the other members of the group secure stock at such a big discount to the current price? Well, the answer is that they swapped a form of debt in the company, known as a promissory note, for the stock. The notes paid 0.56% interest per annum and ran until 2030, so they have cashed in early. That decision was probably driven by two things, namely a pickup in interest rates and the performance of Hyster-Yale stock. Let's be clear. The former holders of the notes have secured the stock at an advantageous price. However, the fact that insiders and their family members have chosen to swap debt for equity could be seen as a vote of confidence in the latter. Hyster-Yale is a mature business. However, some of its end markets are going through an explosion of growth. Think of e-commerce and fulfillment, all those warehouses and distribution centers that need forklifts to operate efficiently. If the company can reduce its costs and drive growth in its hydrogen fuel cell and attachments businesses, then those changes should be reflected in both the top and bottom lines, and that could be very good indeed for the share price. The business is 60% owned by institutional investors, and they might well be receptive to an approach by an activist investor with an eye on shareholder value. Let's watch this one closely from here. That's all we have time for this week, but as usual, make sure you do your own due diligence before making any investment decisions.